Good morning, and welcome to Crypto 30 Insights. Today, we are taking a deep dive into the extreme volatility of the Ethereum market. We've just witnessed a brutal multi-billion-dollar liquidation event, and yet the data shows another potentially historic move may be setting up right now. This is a tale of two sides of the market, the bulls and the bears, with billions of dollars on the line. First, let's analyze the aftermath of the recent sharp correction. The numbers are staggering. A colossal $9.32 billion in long positions were liquidated. Let's be clear what this means. Billions of dollars from investors betting on the price to increase were completely wiped out as the market fell. This indicates a massive and painful adjustment. For comparison, only $327.89 million in short positions were liquidated during the same period. The disparity shows just how aggressive the selling pressure was. One of the most critical data points was a massive cluster of liquidations, a single concentration worth $8 billion belonging to long position holders. The forced selling from this event created enormous downward pressure, serving as a stark reminder of the risks of leverage. All of this has brought the market to where it stands, with the price of ETH at the time of this data being $4,282.30. This event has sent significant shockwaves across the global markets, and especially in the United States. The psychological impact is severe. A wave of liquidations this large deeply damages investor confidence, particularly for those using leverage. We are seeing a shift towards caution as billions in losses force investors to reassess risk. For American traders, from individual investors to large hedge funds, this highlights the extreme risks present in the derivatives market. Events like this inevitably attract more attention from U.S. regulators, namely the SEC and the CFTC, who are closely monitoring this high-stakes environment. It's also a warning about systemic risk. While not a direct threat to the entire U.S. economy, the collapse of large crypto funds or lending platforms is a real possibility, and these numbers show just how quickly that can happen. But that was the past. Now, looking at the ETH Exchange Liquidation Map again, a completely different and potentially opposite story is forming. Pay close attention to this. The data now reveals a formidable wall of over $8 billion in short positions, traders betting against ETH stacked just above its current price. If the market has enough buying power to push ETH above its previous all-time high, it could trigger a massive short squeeze. This creates a domino effect. As the price rises, it liquidates the first layer of shorts. The forced buy orders push the price even higher, hitting the next layer of shorts, and so on. The $8 billion figure suggests this could become one of the largest short squeezes in Ethereum's history. If this squeeze is triggered, the impact on the U.S. market would be explosive. It would likely ignite strong bullish sentiment, attracting a flood of new capital from investors who are waiting on the sidelines. The momentum, fueled by the U.S. market, could push ETH well into price discovery mode. So, here we stand at a critical crossroads. In the rearview mirror, we see the brutal memory of a $9.32 billion wipeout of bullish investors. But just ahead, we see the potential for an $8 billion squeeze of the bears. The final question is this. After such a painful correction, is there enough buying power left to light the fuse for this squeeze? Or will the recent fear keep the market suppressed? This is a pivotal moment for Ethereum. Let us know your prediction in the comments below, and be sure to subscribe for our continuous coverage.